Imagine this for a second. You buy something, maybe for like pocket change 14 years ago. You stash it away, forget about it mostly, and then boom, one morning you find out it's worth billions. Not millions, billions with a B. Sounds like a lottery win fantasy, right? But it actually happened in the crypto world just recently. Two massive Bitcoin wallets, totally silent for over a decade, suddenly sprang back to life. So for this deep dive, that's our mission. We're going to peel back the layers on this, well, frankly, incredible financial story. We'll look at exactly what happened, the mind-boggling games involved, and what this awakening really means for crypto, for digital assets overall. Yeah, get ready, because we're going to uncover some pretty surprising stuff and hopefully give you some really crucial context.
And adding to that, what's really fascinating, I think, isn't just the amount of money, which is obviously huge, but the implications.
Yeah.
What does it mean when something lies dormant for that long and then suddenly moves? It gives us this unique little window into Bitcoin's earliest days and maybe into the mindset of those, well, very early, maybe unconventional investors.
Okay, great. Let's unpack this then. The Bitcoin community was, well, basically electrified recently. News broke that two enormous Bitcoin wallets became active, and we're talking big here. Each one held 10,000 Bitcoin, so that's 20,000 Bitcoin total. And these weren't just minor transactions. These accounts hadn't been touched for 14 years. Now, here's the really wild part. These coins, they were originally picked up way back in 2011. Back then, a single Bitcoin cost just 78 cents. 78 cents. Fast forward to today, Bitcoin's hovering around, what, $108,868? Just try to wrap your head around that kind of transformation.
I'm sure.
Yeah. So if you run the numbers, the value of each one of those wallets, it's now over $1.09 billion.
Each.
Yes, each one. So together you're looking at more than $2 billion in potential profit. It's staggering. And naturally, blockchain trackers, services like Look on Chain and Whale Alert, they're constantly scanning for big moves like this. They flagged this activation almost immediately. It was big news.
Yeah, and what's really noteworthy here, like you said, is this whole concept of dormant accounts within the Bitcoin world. It's not just these two. To give you a sense of scale, BitInfo charts actually report something like 18.04 million Bitcoin are just sitting in inactive addresses right now. That's a huge chunk of the total supply. Wow, 18 million. Exactly. So when really sizable accounts like these suddenly wake up after years, years of silence, it grabs major attention from investors. And the reason is pretty straightforward, really. It's the potential market impact. If that much Bitcoin gets moved, or more importantly, if it gets sold, that could definitely ripple through the market.
And it does seem like this year, 2025, is shaping up to be kind of a busy year for these old, sleeping Bitcoins waking up. There's a report earlier this year from On-Chain School, their blockchain analysis firm. They found that the amount of, let's call it old Bitcoin, moving in just the first 3 months of 2025 was more than double the volume we saw in the same quarter last year in 2024.
Double. That's significant.
Yeah, double. To put numbers on it, their data, which they shared on CryptoQuant, showed 62,800 Bitcoin that hadn't moved in over 7 years were spent, meaning moved between January and March 2025. Compare that, just 28,000 Bitcoin in Q1 of 2024. That's a jump of 121%. A huge increase in these really old coins suddenly being on the move. It really makes you ask, why now? What's triggering this?
And that trend, that why now, immediately raises fascinating questions about intent. What are they planning to do? Because, okay, these specific 20,000 Bitcoin, they've definitely shifted addresses, they've moved. But what the owners plan to do next, beyond just moving them, we don't actually know yet. For the moment, technically, they're still HODLers. You know that term, right? It's crypto slang for people who hold on to their Bitcoin long-term, believing in its future potential, ratting out all the price swings.
Like, hold on for dear life.
Exactly. And Caroline Bowler, she's the CEO of BTC Markets. She gave some interesting context on this to MarketWatch. She pointed out that way back in Bitcoin's very early days, there was already this really strong belief, this conviction around HODLing. So finding investors who bought way back then and held on for this incredibly long time, while it's definitely rare, she says it's not totally out of character for that sort of pioneering phase of crypto.
That's a good point. But still, that level of commitment, holding through 14 years of crypto's insanity, all the massive crashes and euphoric highs, how do you even compare that to traditional investing? Bowler's comment about the remarkable amount of self-control it must have taken really struck me. Seriously, if I had something that volatile for 14 years, I think I'd be checking it constantly, maybe having panic attacks during the dips. That patience is just, wow.
It really is extraordinary. And it naturally leads to the big what-if question that worries some people. What if these owners do decide to sell this massive amount? Billionaire acknowledges, yeah, it would absolutely move the market. You can't just drop that much Bitcoin without making waves.
Right.
However, she's also pretty clear that it's highly unlikely they just dump it all in one go on a public exchange. That would tank the price. Instead, the more probable scenario is selling it off the market as much as possible. That usually means over-the-counter or OTC deals. Big blocks sold directly to institutional buyers or other large players who can absorb it without causing a public market panic.
Ah, okay. So less visible, potentially less disruptive.
Exactly. She thinks a direct dump of, say, 10,000 Bitcoin in a single trade, or even spread out over just a week on regular exchanges, seems very improbable. And there's another poignant factor here, too.
Hmm.
We have to remember that many dormant wallets holding significant Bitcoin are probably lost forever. People lose their private keys, forget passwords, pass away. All sorts of reasons.
True, like digital treasure chests with lost keys.
Precisely. And that's what makes the activation of these specific wallets so interesting, so notable within the Bitcoin community. These owners managed to hold on not just through market volatility, but they also kept access, maintained their security, remembered how to get back in after 14 years. That itself is quite something.
Okay, so let's maybe zoom out a bit from just these two wallets and look at the bigger Bitcoin picture right now. The market's been pretty active. Bitcoin's price, it's gained about 16% so far this year. It even hit a new all-time high, just above $110,000 back in May. A lot of that recent momentum seems to have been driven by general market optimism, and specifically by these record inflows we saw into the new Bitcoin ETFs that launched.
Yeah, and if we try to connect these dormant wallet activations to that bigger picture, you see predictions out there that really lean into this idea of Bitcoin's long-term value proposition. Tom Lee, for instance, he's head of research at Fundstrat Global Advisors. He's pretty well known for his Bitcoin calls. He recently reiterated his prediction that Bitcoin could potentially finish 2025 somewhere around $250,000.
Wow, 250K, that's ambitious.
It is his high-end target. He also mentioned his base case is still a very strong $150,000. But his core reasoning, which he talked about in a recent interview, is what he calls this huge supply-demand imbalance. He makes the point that, quote, 95% of the world doesn't own Bitcoin. His argument is that this suggests there's this vast untapped pool of potential new buyers who could enter the market over the next, say, 10 years.
95%, that's a huge number. So what does this all really mean for you listening to this?
Well, this story, these ancient wallets holding strong for 14 years, suddenly worth billions. It really seems to capture this deeper, broader belief in Bitcoin's future, doesn't it? It highlights this incredible path it's taken from being this obscure, niche digital experiment to something that's now recognized, debated, and traded all over the world. I mean, it's more than just a story about getting rich. It feels like a powerful case study in, disruptive innovation, where extreme conviction, maybe radical patience, can turn what looked like pure risk into just unprecedented reward. It kind of challenges how we normally think about investing, right?
It absolutely does. And maybe this raises an important question for you to think about after this deep dive. What does the awakening of these sleeking giants, these huge, long dormant wallets, and the whole HODLing mentality they represent, what does that truly tell us about the long-term potential, maybe the resilience of completely new kinds of assets like Bitcoin? And thinking about Tom Lee's point, what insight does it give us into the mindset of those really early adopters, especially when you consider that, yeah, maybe 95% of the world still isn't involved? It really makes you reflect on that unique, maybe sometimes uncomfortable balance of risk, reward, and just remarkable foresight that seems to define these kinds of pioneering ventures in finance and technology. Something to chew on.